This is your LMAX exchange technical update for Thursday, November 9th, 2017. Euro dollar. So the euro has extended its correction in 2017 with the market breaking down to a fresh multi-week low, the lowest levels that were seen since July. And this does leave the door open for a continuation of declines and for the market to potentially trade back towards that 112.30 pattern objective off this head and shoulders top. At the same time, the market has been very well supported in 2017, and if we see the market recover, it could negate this downside pressure. But when we say recover, we would need to see at a minimum a break back above 116.90 and a close above 116.90 to take the immediate pressure off the downside. Until then, the pressure does remain on the downside, and there's risk for a continuation of declines, again potentially back towards that 112.30 pattern objective. Sterling dollar. So cable has been confined to a consolidation over the past several days. The market confined roughly between 130.25 and 133.40, and it's going to take a break on either side for clarity. However, as we continue to warn, the structure is more constructive on a medium to longer term basis following a breakout of significant range resistance at 27.75 earlier this year, which suggests that the market is putting in a long-term base. And so if we do see setbacks below 130.27, they're expected to be well supported ahead of a next higher extension up towards and through the 2017 peak at 136.60, and then again through there towards and through 140 further up. Dollar yen. So dollar yen has been showing signs of rolling over. The market has been very well capped into the 114 to 115 area over the past several months for much of 2017. You can see the range trade here, and so we could be on the verge of rolling over again. Look for confirmation on a close below, a daily close below 112.95. That would strengthen the outlook and accelerate declines back towards the next key support, which comes in at 111.65. But again, there is this possibility now that the market could be looking to resume a range trade and head back down ultimately towards the 107 to 108 area over the coming days. Euro Swiss. Euro Swiss has been very well bid in 2017, with the market now shifting towards the top side, taking out support, resistance at 110 and then 112, and this puts the focus now on a retest of that major barrier that had been supporting the market for so long until January 2015 at 120. If we do see setbacks here, they're expected to be very well supported into the 114 area, and only back below 112 would really compromise this outlook. Aussie dollar. So Aussie dollar has been consolidating recent declines. There is room for a bit of a bounce, but overall the market should be well capped ahead of the next downside extension into the next measured move, which comes in at 75.50. Only back above 79 would really compromise this outlook. Dollar CAD. So dollar CAD has been recovering over the past several weeks. We have seen a bit of a pullback, but overall there looks to be a meaningful recovery in play here, and so setbacks now are actually viewed as corrective, ideally supported in the 126 area, in favor of a continuation of this recovery up towards that next key psychological barrier here at 130. Only back below 124 would compromise this outlook and put the pressure back on the downside. Kiwi dollar. The New Zealand dollar has been under pressure over the past several weeks, matching the 2017 low that had been in place back in May at 68.18. We could see a bit of a correction here over the coming sessions, though ultimately rally should be well capped in the 71 area, with only a break back above 72 to negate the bearish outlook. SPX 500. The S&P 500 has pushed up to record highs and continues to push up to record highs, and though the market is showing medium and longer term technical studies that are severely overextended, there does appear to be risk for some form of a correction looming over the coming days, maybe weeks, but we would need to see a break back below 25.44 at a minimum to take the immediate pressure off the top side. Until then, there's risk for a continuation of this record run. Gold. So gold has been very well supported, as we've been showing over the past several months. The market has seen some intense dips, but ultimately always supported in favor of fresh highs, most recently a 2017 high in September at 13.57. And so look for this latest round of setbacks again to be supported in favor of the next upside extension back through 13.57 to challenge and break that 2016 peak at 13.75 further up. Here, only back below 1200 though would compromise the outlook.